Slowing down, speeding up. Decreasing in value, increasing in value. What's happening in the luxury real estate market? Selling frenzy, buying frenzy. It is neither. Adjustment. That seems to be the overarching word here for the luxury real estate market and what happened to it in 2022. We all have to deal with adjustments, and the luxury real estate market is no different. As we come on the heels of the rapid explosion of 2020 and 2021, 2022 was filled with contradictions. People were predicting this and somebody else was predicting that. And you coupled that with indications that showed it was going to be a favorable market, that there were going to be favorable conditions. It was just really a mixed bag. When we look at 2022, what's interesting is it has 4 phases. It has 4 seasons and 4 quarters, and they all were really different. Want to learn more about the luxury real estate market and what happened in 2022 and what might be to come in 2023? You're in the right place. This is a video series on the report, Luxury Market Insights. I'm going to tell you everything that happened in 2022 and what we might see for 2023, so don't go anywhere.
I'm Sherri Green with Coldwell Banker. Welcome to my YouTube channel that guides home sellers and home buyers in Washington, D.C. and Northern Virginia.
So 2022, it had 4 phases. It had 4 seasons and it had 4 different quarters for luxury real estate. Each one was really different and they had distinct markers so that we could see what was happening in the luxury real estate market space. In this series, I will address exactly what happened in each of those 4 quarters and do a little bit of predicting, although you're going to hear that that might not be the best idea. What might happen in 2023? 2022 was so hard to predict. You had experts over here saying this, and you had experts over here saying this. It was contradictory statements all over the map for 2022, and 2023 may be the same way, but let's see what our data, what our predictions are telling us. This report is put together by my brokerage, Coldwell Banker Realty, along with the Institute for Luxury Home Marketing, of which I am a member. You have to be certified to be a member of the luxury, and that is based on the amount of real estate that you sell in the luxury property space. I'm also a member of Realm, which is a membership-based organization as well, that is the top global agents from all over the world, focused on lifestyles and behaviors that shape the real estate purchase and the real estate sale. All of this report also has data from WealthX and several other sources. And if you want to read the report from cover to cover, it's over 100 pages. There's a download in the description, so make sure you check that out. What I want to do in this video series is wrap up what happened in 3 videos so you can get a little bit of a digest, a little bit of a Cliff Notes version of what this report is telling us. In this video, I'm going to go back and look at 2022, those 4 phases we talked about, those 4 quarters, and then in upcoming videos, I'll talk about other things that are related to the luxury purchase in 2023. So let's start with the first quarter of 2022. What happened? It started with really strong, high demand and some of the lowest inventory that we have ever seen. This brought record prices, multiple offers, and homes being sold well over ask. Prices rose by almost 6% for single family homes and over 20% for attached residences. Meanwhile, property levels dropped on average 27%. So now you see why we have this demand. Little inventory, little supply, high demand. So the first quarter, it looked like we were going to have a banner year. This first quarter showed all signs of everything still moving that might indicate we were going to have a 2021 market or a 2020 market all over again. But things started to change. So the second quarter saw the Feds raise interest rates since the first time in December of 2018. Let that sink in. It was the first interest rate hike since December of 2018. Add to that, the S&P 500 decreased over 16%, and that was the largest decrease we had seen since 2020, March of 2020. We all know what happened in March of 2020. We had the virus and the S&P 500 fell. So the rising concerns over inflation, the war in Ukraine, it all brought uncertainty to the high-end property market. Now we hit third quarter and a notable downshift starts to happen from the affluent buyer who's letting all of these things sort of absorb in. Interest rates, the war in Ukraine, the S&P 500 falling. You couple all of that with the typical slowdown in the summer, the late summer market, and that's what the third quarter showed us. All of these concerns, the typical seasonality that we have, and third quarter started to look a little slow. So in the third quarter, what really was affecting all this likely was the interest rate. That probably was the biggest driver of the slowdown that we started to see. And you have to think about it like this. During the pandemic, a lot of people, a lot of buyers bought property that they wanted, that they needed, and they got it for a really low interest rate. Some in the low 2s, some in the high 2s and the 3s. So if somebody wanted to sell that and trade up to a different place or a bigger place, they're having to trade in that tiny little interest rate for now something that had hit 6% and higher by September. So not only was this interest rate affecting the buying, it was affecting the selling. Sellers who really didn't have to go anywhere didn't. And so if they weren't going anywhere, that caused the new inventory to the market to be really low. And then they weren't buying anything. So the inventory that had already been put into the market, second quarter, let's say, beginning of third, just began to sit. So that gets us to the fourth quarter. One of the most contradictory quarters, one of the most contradictory 3-month periods we've ever seen in real estate, especially in the luxury real estate market. By December, the majority of the luxury markets were still seeing signs that it was a seller's market. There were still signs that conditions were favorable to the seller. Prices had not decreased as much as been predicted, yet the number of sales continued to fall. Why were there these anomalies? The lack of new inventory to the market limited the number of choices that buyers had. And then you coupled that with the fact that sellers and buyers couldn't align on the price, and therefore inventory started to sit. So at the end of 2022, median luxury single-family home prices across 125 U.S. markets slipped only slightly from the second quarter peak, yet they remained flat compared to the start of the year. There are a few reasons thought to be responsible for this decline. Affluent buyers who were crunched by the interest rates sought smaller, lower-priced homes or paused their purchase altogether. Others turned their attention to second homes or vacation homes, which typically are at a lower price point, and they're typically less expensive than their primary residence or the primary residence they would have bought. So what's to continue in 2023? Only time will tell if this modest price decrease will continue. In my next couple of videos in the series, I'm going to talk about what is to come in 2023. What does this data tell us, and what are the predictions for the next year? What are the predictions of what the affluent buyer is looking for? That's what you can look forward to in video 2 and video 3. So if you haven't subscribed yet, make sure you do. And while you are here, if you want to read the whole report, check out the description below and you can download it and read it all.